Well, the main point for equity markets over the past 24 hours is that they have been very soft, with falls in equities out of the US as well as out of European markets. And the main background to the falls that we have seen recently is the fact that we've seen commodity products also fall quite significantly. Oil prices fell around 8 to 9% overnight in one day's trading alone, and most other commodity products have also been falling over recent days. The key question will be whether food commodity products also fall, but we've seen some recent declines in prices, but most have been holding on relatively well. The other economic data that we've seen out is some weakness in retail sales out of the Australian economy, and this is putting some pressure on the fact that they could see a decline in GDP over the first quarter of this year. After the Australian dollar was trading around $1.10 against the US earlier on this week, it's now trading under 107, and this has also translated into weakness for the Kiwi dollar, where we've traded over 80 cents but are now down around the 78.50 mark. The New Zealand dollar did actually increase briefly on Thursday following the more positive results from the unemployment data. The unemployment rate here in New Zealand did decrease from 6.8% down to 6.6% in the first quarter of 2011. The data did indicate some mixed results. The fact that the Canterbury region was excluded is likely to have overstated the positive benefits. We are picking that we will see some weakness in unemployment results through 2011, mainly due to the effects of the earthquake. However, it does also suggest that there has been some positive news for the rest of New Zealand. Employment has actually increased, and businesses are feeling a little bit more confident to expand than they were through the latter part of 2010. Local wool prices have seen a little bit of easing over the past couple of weeks, and I think there are a couple of factors that are affecting the wool market here in New Zealand. The first is that we have seen some weakness on the international front, and the second is that the New Zealand dollar has been trading high, well over 80 cents, for the better part of the last 2 weeks. However, the international market is starting to look a little bit more subdued. Competing fibre markets such as cotton have decreased significantly over the past couple of months. After trading around $2 per pound in parts of February, they're currently trading at $1.50, a drop of around 25% in just 2 months. This is likely putting some pressure on wool markets. While we're still picking that wool prices will be positive, I wouldn't be surprised to see some drops from current levels.